on Business Incorporated today. IMF World Bank annual meeting begins today in the United States. Zimbabwe increases its census budgets for the year. Angola predicts a production of 14 million carats of diamonds every year. Hello and welcome to the program. I'm Ini John Mekwa. Well, we'll start off this week's edition with major equities on the African continent. Let's start with Nigeria. The NGX was trading sharply lower today at intraday. Its benchmark index was down 0.62%, while South Africa's main index rose by more than 1%. Egypt's EJX 30 was bullish at intraday, while Nairobi's stock exchange closed Friday's trading session negative. It was down more than 1%. Crossover to the Middle East now, where sentiments were mostly positive at intraday. The Abu Dhabi and Dubai's indexes were up 0.75 and 0.27% respectively. Elsewhere in the region, Saudi Arabia and Qatar indexes traded in the opposite directions. Saudi Arabia was down 0.68%, while the Qatari index inched up 0.14%. We move to Europe now, where stocks were muted today, searching for direction after a volatile week. The Pan-African stock 600 hovered around the flat line in early trade, with travel and leisure stocks shedding 1.1%, while basic resources gained 1.4%. Meanwhile, 3 European Central Bank policymakers on Friday discussed the possibility of exiting pandemic-era monetary and fiscal support measures, and the ECB is expected to make a decision on its extraordinary stimulus measures in December. We have more from the region now. Christy joins us from Frankfurt. Hello, Christy.
Hello. Hi.
Yeah, good to have you. To what extent has, we've been talking about the surge in global gas prices, to what extent has it influenced the government's reluctance to move away from the coal-fired power generation? Because we're also talking about the environment hazard also.
Yeah, so I'm sorry, the connection is a little bad, but I know we wanted to talk about energy prices and
yes.
also this letter out of Germany today from over almost 70 major companies calling for the next German government to prioritize the transition to green energy. So to talk a little bit about that and what's going on there, which of course ties back into this whole topic of high gas prices right now. These companies, which include some really big industrial players like ThyssenKrupp and Bayer, they have basically called on the next government to make focusing on the green transition a major priority of their first 100 days. And what they're really asking for here is clarity so that companies can prepare. They're saying, we want to do our part in helping this this transition, this energy transition, but we need clarity from you. And this is a little bit because German companies in the past have been burned by when Germany has made sudden transitions away from certain energy sources, for example, like coal or atomic energy. So this is their attempt to get ahead of that a bit.
Well, another attempt is that the government is seeking to increase the role of private sector in power generation to increase supplies. How successful does it look like this process will be?
I'm so sorry, the connection is still not so great here, but to talk a little bit more about this subject, this is going to be a really interesting fine line for the government and for companies to walk here in Germany and in Europe as well, because basically we're seeing really, really high gas prices. This partly has to do with the fact that we've seen underinvestments in traditional fossil fuel energy in the last few years as people have moved away from those and moved towards investing in greener energy. But of course, that's one of many factors causing the spike in prices right now. So politicians will be looking at balancing keeping people warm this winter as we go into the colder months with not overly warming the globe, so to speak.
All right, Christy. Well, you also have South Africa, a lot of things are happening there. They're supposed to have moved away from the coal and now the coal-fired power. So you have the power sector reform over the coming years. How does this affect you guys there, and what possible impacts are we expecting from these changes?
Right. So a little bit what I mentioned before. You know, we saw basically what we're sort of seeing right now is a swift, what has been a somewhat sudden and swift move away from these traditional fossil fuels in Europe, especially in the last year or two, as climate change has become a much larger issue politically, with a lot of people saying, you know, we need to have a transition to green energy. Now, the problem is that the renewable sources just aren't there right now. It cannot fill the gaps left where a lot of the fossil fuels, or cannot fill the gap left by fossil fuel, I should say. So we're really seeing a lot of tension right now, particularly this season as it's going to be getting colder. This has been a bit of a hit for that green transition, I should say, as people are looking again towards energy like coal, basically saying, oh, I guess we do need more coal because the renewable energy just isn't there yet. So this will be a major issue for example, the next German government, but also for governments around Europe in the coming years, as they really try to increase that supply of renewable energy to make good on their promises to do a green transition.
All right, Christy, thank you so much for your update, and do enjoy the rest of your day.
Thank you.
So let's move over to London now. We have Juliana, of course, joining us from our London studio. And Juliana tells us there's been another upgrade in the travel list of the UK. I wonder which country has gotten to the green list now. Hello, Juliana. What's the latest?
Good afternoon, Inna. Yes, the infamous travel red list, which has been hated by many, has almost been scrapped. Almost, because there are still 7 countries that remain on the red list, which are Peru, Ecuador, Colombia, Panama, Haiti, Venezuela, and the Dominican Republic. So clearly there's something going on with the kind of Latin America areas. But all of the other countries you can now fly to. So this obviously includes South Africa, which had been on there for almost a year, and Mexico. This was previously announced last week by the Transport Secretary, Grant Shapps, because so many families had complained that they hadn't been able to see their loved ones. Trade, tourism are deeply affected, and it does come at a time when John Holland Kay, the boss of Heathrow, once Europe's busiest airport, released statistics for September showing that passenger numbers were just 38% at pre-pandemic levels. So the aviation industry, particularly in Britain, has been reeling because of this traffic light system. So it does stay in place, but rather than it being red, green, amber and red, it's now go and no go. So the vast majority of countries in the world are now go. And even if you were previously on a red list, I'm just making sure I get all of this right, Innie, because it does change from week to week. PCR tests are now scrapped. They're going to be replaced by a lateral flow test. And also, if you are coming from countries, including Nigeria, you no longer have to self-isolate for 7 days. You take a test day 2, and if that is negative, then you can go about your business. So massive changes, very much welcomed by the travel industry and, of course, travelers around the world.
Yes, holiday makers, business people are really happy about this. And I'm sure we will see the impact in travel stock and in the markets in a short while. But for now, the pound was up this morning when we talked. What does it look like this morning? What's the market looking like?
Well, the pound is still very much in a good stead. It's been rallying very, very swiftly against all other G10 currencies, including the dollar. And the FTSE is also doing pretty well. Started off the week in positive territory, trading up, particularly the miners. They're really leading the FTSE all-share, and that's because there's lots of sentiment at the moment around inflation, what is going to happen with certain stocks. So a lot of investors are really putting their their money, where they know their money is actually in a physical asset, which is why commodities are doing particularly well. At intraday, the FTSE All-Share is actually flat, but the FTSE 100 is up 0.11%, though the FTSE 250, that domestic market, is down at the moment by 0.70%. As we were saying, in the currencies, the British pound is flying high up on the US dollar by about 0.12%, also high up on the euro by 0.18%, and trading up also against the Japanese yen by 0.72%, Innie.
All right. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
Well, let's move to the United States now. Stock futures were slightly lower today to start the week as traders eyed surging in energy prices and the start of earnings season around the corner. The Dow Jones Industrial Average futures fell 0.38%. The S&P 500 futures lost 0.52%, while the Nasdaq 100 futures shed 0.79%. The Dow is coming off its best week since June. Meanwhile, energy stocks led by pre-market gainers as U.S. crude oil jumped more than 2% to above $81 a barrel. We have our correspondent, Chimeze, in Washington to bring us up to date on what we're expecting and what's going on there. Hello, Chimi. Good afternoon. Good to have you in diaspora today.
Thank you, Innie. Well, it's good morning here, and it's a beautiful weather here. It's not too hot. It's not too cold. By the way, it's a holiday here, a federal holiday. We have government workers at home, and, of course, schools at home. But the stock market, of course, is open,
yes,
and, of course, private businesses are working. As for the 2021 IMF World Bank meeting, of course, that begins in earnest today. As you can see, all is set for that. But you know, prior to today, a lot of seminars and conferences have been going on here in this building, and tomorrow we're expecting the IMF to release the World Economic Outlook. Prior to now, the managing director of IMF, Kristalina Georgieva, had indicated that the global economy may likely taper from what they had predicted in July, which was 6%. So we will wait until tomorrow to see how that plays out. And then also tomorrow, we're also going to have the release of the Global Financial System Stability Report. Those are the two reports we will be expecting tomorrow, and I'm sure I will be able to bring you up to speed with those. And on Wednesday, we have the Fiscal Monitor report released. For now, that's what we have.
Yeah, well, that's good to know. We're expecting that. But we'd like to know, which of the Nigerian delegates do you have there? And do we have any specific seminars, meetings, or, you know, press meetings with them?
Well, I haven't seen any of the Nigerian delegates, but you can be sure that the Minister of Finance and, of course, the central bank governor will be leading the team to this meeting. Under normal circumstances, this meeting is supposed to have a lot of people filled here. This is a Pennsylvania street that houses the World Bank and the IMF. But because of the pandemic, they have to do all of these virtually. This year's own is different because it's hybrid. So some member countries, of course, are coming in for their in-house meeting. For Nigeria, of course, they're going to have their statutory meeting, which is done indoors there, and some of the conversation, of course, would be around economic sustainability. They'll have to talk about the reforms of the foreign exchange market. They'll have to talk about the fuel subsidy issue, of course, the debt issue. Remember, last week, the federal government, of course, had indicated that they're going to go more borrowing to fund the budget. So all of those issues are going to be discussed at this meeting. There's also the Article 4 consultation that is expected to happen in November. So prior to this, I'm sure a conversation will be held. The Minister of Finance and, of course, the central bank governor are expected to brief the press at the end of this meeting. So we'll wait and see and hear from them what the outcome of their meetings would be. I'm sure I will get you updated on those.
Yeah, looking forward to that, Chimi, and do stay safe there until you come back home. So let's move to South Africa now. South Africa's mining and energy minister said that the country must manage its energy transition and should not rush to move away from coal-fired power generation. This comes at a time when the coal and gas prices have been surging globally as economies are starting to recover from the coronavirus lockdowns. Coal is a major export for the country, and the transition would have significant impact on the economy. Well, let's talk about some of the expected impact with Matt Kindiger, Associate Practice Lead with Sub-Saharan Africa Frontier View, joining us now from London. Hello, Matt. Good afternoon.
Hello, good afternoon. Thanks for having me on the show today.
Great to have you. So to what extent has the surge in global gas prices influenced the government's reluctance to move away from the coal-fired power generation?
Yeah, so the timing is quite interesting. So I would say it has partly played a role in the government's very clear announcement that it doesn't want to move away from coal-fired power generation. But I would say that the reality is probably a bit more complex. There are a couple of factors at play here behind the government's motivation to stick with coal. One factor is that it has invested quite heavily in new coal-fired power stations over the last decade or so in an attempt to deal with the country's power shortages. So it is extremely reluctant to make significant commitments to reversing its track after making such significant investments into coal. But additionally, the government simply lacks the physical capacity to invest heavily in rapidly changing its energy mix. Although South Africa has massive renewable electricity potential, especially when it comes to wind generation potential and solar power generation potential, the government simply doesn't have the resources to invest in these new technologies. So for the time being, we expect the government to stick more or less with coal over the next couple of years.
And the government wants to increase the role of private sector in power generation. How do we see this going?
Yeah, so South Africa really is in desperate need of reform of the power sector. So the country has been struggling with a lack of power capacity since about 2008. And this is because of a problem with long-term planning when it comes to investment into new power generation capacity. South Africa's electricity industry is dominated by the state-owned utility Eskom, and it has suffered from severe neglect and corruption over the last decade as well. So what the government wants to do is reduce the role of Eskom as a dominant force in the electricity generation sector in South Africa. It plans to do this by offering private sector companies licenses to generate up to 100 megawatts of power. It announced this earlier this year, and it really is seen as a vital step in addressing the country's power sector problems. Although we're unlikely to see an immediate benefit, this is because it will take up to 2 years for new privately run independent power producers to materialize when it comes to being able to generate power on a meaningful scale. So although the private sector is expected to play a bigger role in the generation of power in the coming years, it probably will take a couple of years before we see a benefit.
And which of the industries are most likely to be most affected in the coming years?
Yeah, so certainly the increased role of the private sector in power generation really is a fundamental prerequisite for raising investment, productivity, overall economic growth in the country over the coming years. One of the major reasons why the country has suffered from low economic growth is because of power shortages. So the country's major export-oriented industries, including mining, manufacturing, including the automotive industry, will certainly be the most direct beneficiaries of power sector reform in South Africa. But we could also see smaller and medium-sized enterprises benefit, even those companies that won't be able to invest themselves in independent power production. And this is because if the government decides to allow municipalities to invest in their own independent power production, then we could see mini-grids established in South Africa, which would mean that municipalities could supply power to households and small and medium enterprises. And so this would also be a boost for them over the longer term. But it really does depend on the regulatory approach that the government decides to adopt over the next couple of years.
All right, we'll certainly be following that story to see which regulatory approach they take and the impacts on the economy. Thank you so much, Matt, and enjoy the rest of your day.
Thanks.
So moving on now, the budget needed to undertake 2022 population and housing census was reviewed upwards. That was in Zimbabwe. That's in Zimbabwe by $13 million to cater for COVID-19 precautionary measures during the enumeration process that are to be conducted after every decade. The census is critical as it allows government and other stakeholders to plan, monitor, and evaluate their programs. The last census in the Southern African nation was held in 2012. The recent one is scheduled for next year, April 21st to April 30th. And Angola has predicted a production of 14 million carats of diamonds per year. The Minister of Mineral Resources, Oil and Gas announced this after the signing of a contract on mining investment related to the concession of the Chiri in the Angola's eastern Lunda North province between the diamond firm Endiama and Rio Tinto Group. Mining investment document foresees an initial phase participatory interest of 75% for Rio Tinto and 25% for Endiama EP and the constitution of a joint venture. We go to Egypt now, where the country has commenced the construction of a gas pipeline with an estimated capacity of 15 million cubic feet of gas per day in the Western Desert. The pipeline is being constructed by Egyptian General Petroleum Company, EGPC, which currently produces about 74,000 barrels of oil equivalent per day. Earlier this year, Egypt announced plans to invest around $1.4 billion to explore oil and natural gas at 9 new sites in the Mediterranean Sea and the Red Sea. The State Ministry of Petroleum and Mineral Resources said it will drill a total of 23 new wells across both seas and has reached a total of 12 agreements. And that's it on the program today. Thank you so much for being a part of it. I'm Ini Johnman.